Welcome to Silver Heist. Thank you to our returning subscribers and guests. So today we want to talk about your retirement, how to maximize your wealth. So when you get to retirement, you have funds that you can draw down so that you can continue to support yourself while not working. Some of the questions we're going to look at is how can you get gold into your retirement mix? Is now a good time to move from stocks to gold? And how can you actually own gold inside of a retirement system, such as an individual retirement account? There's different ways that you can fund your retirement. You can do it inside of an IRA. You can do it inside your company's 401k. Or you can just do it inside your personal savings. Now the IRA and the 401k have certain rules that you have to work inside of, so it limits your choices and it limits your access to it, where here you can do whatever you like, whenever you like. So a couple of principles that I want you to think about is treating this as a whole. So between the extremes of unlimited choices and limited choices, if you treat it as a whole, you can have a balance of the choices that you want. So just in terms of 401k versus IRA, so inside your 401k, you may have limited choices that you can choose from. So when you leave one company, I would highly suggest that you roll over that money into an IRA where you'll have many more choices, almost unlimited Wall Street type choices to choose from, because your new company is only going to give you limited. And you don't want everything in one bucket anyways. So one strategy in balancing your quote portfolio is, say, to balance it between small, medium, and large stock mutual funds. So in your company, if you have not very good choices for small, you could put your mix between small, medium, and large. But when you roll over your other 401k from your previous employer to an IRA, you treat this as a whole, and what you would do is make up for that deficit and have something like this, where you would have small, large, and medium. So as a whole, you have a blended portfolio. If you have better choices here to choose mutual funds out of small, then do it that way. So that's principle one. Treat your savings across all the different categories to achieve the balance that you want. Another way to achieve balance is to recognize that perhaps your IRA is a place where you're parking wealth, where 401k is where you are adding to and growing wealth. So if you're parking wealth as well as growing it internally, you might have small, medium, large here, and you hope for future gains just on what you have. But here, since you are adding to it on a continuous basis, you can add more to certain choices and less to others. So when you combine the two together, you achieve the balance that you want. So what you're looking to do is, over time, multiply your wealth. So if inflation is increasing at a certain rate and multiplying over time, then you want your wealth to outstrip inflation so that it is more than just keeping up with your spending power. If you're going to work 40 years and then live off the savings for 20 years, you can't just keep up with inflation. You need to outstrip inflation by a lot. Okay, so the other thing I want to show you is that if you are here and you're trying to grow your wealth to here, what happens if there's a major correction? So if you're here and you lose half your value very quickly, that is a 50% drop. But if you are trying to get to here, when you experience a 50% increase, you're not even back to where you started. It takes until you have a 100% increase from this point to even get back to where you were. So the problem is, if you are approaching retirement age, you can't afford to lose all this time and not grow your wealth. You are trying to increase your wealth. So if you are retiring here, you can't afford this downturn. You want to avoid losing your wealth a major correction. So what you're trying to do is avoid losing your wealth in a major correction. Now, I don't recommend, or I'm not claiming I can time it, but let's look at some trends. How long have we been in an upswing? Do you think that the market might be ready for some type of correction? Not a meltdown of epic proportions where systems no longer function, but just a bubble. Do you see a bubble about to burst that still leaves systems in place? A major correction, a recession. So what you want to do is avoid some of that correction. And so what some people do, including myself, is to, in the money that you control and you can do whatever you want with, you have money as savings, but you may also have gold or even silver as savings. And that is a hedge against inflation. That if you just park your cash in a savings account, even an interest-bearing savings account, you can't keep up with inflation. So you want something that keeps up with inflation or outstrips inflation. A place to park your wealth that in the future it is still worth something of value. So gold is money. Gold has always been money for thousands of years. It is a form of wealth. It demands something of value in exchange for gold, but it will deliver you something of value in the future when you sell that gold. So how can you use that to your advantage? Not only a hedge against money, but also a hedge against stocks going down. We had this invested in the IRA and it grew. So all of this area represents profit. So we have taken some of this profit, let's say this much, and we've taken it off the table. So we have parked this wealth in a gold equivalent. So that is locked in. Because if you take all of it off the table, then you are just maintaining your wealth. You're not growing your wealth. So the hope is that, so what we've done is we've only taken the some of the profit off. We've left sort of quote the principal so that the principal has the opportunity to grow in the future. If the principal contracts to this, we still have maintained some of our wealth in gold. And frankly, in a market where that is contracting, quite possibly the gold value will increase opposite to the direction of that. Okay, so in a hypothetical situation where you have a blend of stocks and gold, in a major market correction, while stocks could go down and shrink, the value of stocks could go down, you hope, and it is shown to be the case, that gold could go in the opposite direction. If there's a major correction and the value of stocks go down, gold will be seen as a safe haven and investment will flow into gold, and the value of a given quantity of gold will go up, so that you're at least holding your wealth steady instead of your wealth being decimated over the short term, because you have a limited amount of time until you retire. You can't afford that level of market correction. Okay, so it's February 2020. So let's look at what we're talking about. Dow Jones over the last year is upwards of 10-12%, and over the last 2 years, upward trend, 5 years, up, 10 years, up, with some small corrections. The S&P 500, very similar, 1 year, 2 years, 5 years, 10 years. So 10-year trend, very doubled up in value, 1,500 to 3,000. So 145%. Let's look at the 5-year. So from the 5-year, from the election to now, up over 44%. So it looks like it's ready for some level of correction. So what I've done is we've taken some of our stock market profits off the table and put it into gold. So, and the gold equivalent that we've invested in is the GLD, which is an exchange traded fund. It's a Wall Street vehicle for you to own gold. So it's essentially about 1/10 of an ounce of gold. So that shows when it started over 15 years ago, it was priced around 1/10 of an ounce of gold, and it tracks the value of gold, but with fees, which is why it's, if gold is trading at $15.50 or $15.80, that's why this is a little less than 1/10 of an ounce of gold. So in the very short term, gold has gone up. So we got in around December, and gold is up 7.5%. Where if we go back to the S&P 500, in the same period, it is up 3%. And frankly, it was also up 6-7%, but then it has gone down. So there is a correction in place now that could be trade with China related. Frankly, I think it's the coronavirus related, and the coronavirus having an impact on world trade and commerce going forward. So as the value in stocks are going down, the value in gold is going up. So gold has gone. So gold can go up or down. Don't get me wrong. It's not always up, up, up. Go up, but then it can go down. But the trend is in the upward swing. So in the month of January, gold is up. We're in the month of January. So while the S&P 500 is going down in January, it gave back whatever January gains it had, it gave it all back and then some. Gold has gone up. So it's a very short snapshot, but it shows the principles. While one asset class is going down, another asset class may be going up. Okay, so we're in your personal savings. You can have physical gold and physical silver along with cash and bank investments. This is not the same as physical gold, but this is inside a retirement vehicle which has restrictions. So this is a gold equivalent. So what is GLD? So what is GLD? Well, GLD is paper gold. So it's not physical gold, but it is paper gold. And it is a financial instrument that's traded on the New York Stock Exchange for 15 plus years. So it's backed by physical gold. So there's a big vault of gold in a custodial bank, and there's a lot of it. The fund is worth $45 billion. That is a lot of gold that they have stored in their secure facility. So that gold deposit is bigger than most central banks' gold deposits. There's possibly more physical gold under the management of the GLD Trust than possibly outside of the top 6 or 7 central banks in the world. There's more gold in GLD's vault than in the Central Bank of Japan, for example, or Saudi Arabia. So that's a lot of gold. Now, you have shares in that gold, and you have to be a huge shareholder to ever take physical delivery of that gold. So this is not the same as holding gold or ever taking delivery of the physical gold, but by structuring it this way, it keeps the cost lower. So you need to have 100,000 shares to even think about taking physical delivery of gold. And that would be worth, at today's price, over $15 million. So you would have to have $15 million in assets at the GLD to even think about having them transfer it to you in gold. They have the right to actually just ship you the cash instead. So it's not about owning physical gold, but it's about getting the benefits of physical gold. Because of the restrictions placed in IRAs, this is a way of having exposure to the price of gold without having physical gold. There's more options to have exposure to gold in your IRA than just having GLD. I don't have a stake in it other than I do have a stake in it. I'm a shareholder of the GLD, so I just simply believe in it. From my research, it met my needs. I don't own shares in gold mining stocks because then I would be choosing one company's ability to get gold out of the ground. I'm looking for the wealth preservation of gold itself rather than picking a company who can extract it out of the ground. There may be other ways of having a different custodian other than the GLD to have the physical gold someplace else. I just don't know about those. And I think the idea of a self-directed IRA and setting up some elaborate tax haven or limited liability corporation to somehow store your own gold in a self-directed IRA is not a viable legal option. And you can search on YouTube for places to discuss that at further detail. So this is my choice. You can make your own choices. Let me just say that I'm not an investment advisor. I'm just trying to show you something that I believe in, and I've done enough research to put my own money into this asset, and you need to do way more research before you just follow what I'm doing. So if you're looking to grow your wealth inside your savings, your IRA, and your 401k, and you want to lock in your wealth as gold, you can do so in your personal savings with physical gold, but inside the IRA vehicle, you can do it inside the GLD ETF. If you want to learn more about holding physical gold and silver, please watch one of our featured videos.